It's the 2nd of April, which is Liberation Day according to Donald Trump, where the US will introduce reciprocal tariffs on the whole world. And that's likely to kick in. The announcement will come at midnight tonight, according to the Treasury Secretary of the US. And the markets worldwide are watching, but we're really asking, who is this going to hurt more, India or the US? Remember, like, share, subscribe and sign up for our membership. Let me quickly take you through what happened in our markets today. We actually closed higher, the Sensex and the Nifty. Sensex went up about 0.7%, Nifty was up 0.8%. But remember, this is on the back of a bad cut we had yesterday, when the Sensex tanked about 1.8%. The Nifty had a similar cut. And the reason we were better off today was because our morning papers told us that India has struck a deal with the US. We don't know the details yet, but we'll tell you what that's about as well. Let me first tell you what to expect, right? So, White House Press Secretary Caroline Leavitt on the 31st of March said that countries have been treating US unfairly, which is what Donald Trump has been saying as well. And basically, the goal will be announced on Wednesday for country-based tariffs, but certainly sectoral tariffs, right? So, this is reciprocal tariffs. This is what it means. There's a country that's charging me 20%, I will also charge you 20%. But here's the trick. Different countries have different rates of different products in different sectors. So, how will you arrive at what rate you are going to reciprocate at and how that's going to work? So, also, for example, you can't say that if you charge 20% on my agricultural products, I will charge you 20% on agricultural products as well, because it's not necessary that if a country is exporting agricultural products to you, that they're also importing from you. So, there's going to be a mismatch there. So, how are they going to work that out? We don't know the details just yet. But Leavitt was holding up a piece of paper where she called out the European Union, India, Japan and Canada particularly for very high tariffs, saying it's impossible for American products to be imported into these markets, and that puts Americans out of business and out of work for the last several decades. Now, is it going to be, like I said, product by product, sector by sector? Is it going to be a broad average across the country? We don't know, but we do know that White House trade advisor Peter Navarro, while he was speaking to Fox News Sunday, he said tariffs could raise $600 billion annually. That would imply an average rate of about 20% worked backwards. So that's what we're working with. Now, remember also on the 31st of March, Trump had actually said in one comment that he made that it will apply to all countries that US does business with, not just the top 5 or 10 where they feel that there is an imbalance, which means that the entire global market, the relationship the US has with the entire global market is going to change overnight. And then that would bring the question of, is that going to hurt you more or is it going to hurt us more? There's a report by the Washington Post which says that White House aides have drafted a proposal to impose about 20% on most imports into the US. According to the chief economist of Moody's, Mike Zandi, he said if this is implemented, it will send shockwaves across the stock market and the global economy. Assuming permanent tariffs kick in this quarter, he said the economy would immediately tumble into a recession that would last for a year, sending jobless rates above 7%. And we've gone through this in previous stories. Basically, everything that's imported will have a new tax on it, which means the company that's importing it will have to pay that tax to the government. So they'll just pass it on to the customer. So the American customer is going to wake up suddenly and find everything is 20% more expensive. That will hit inflation really badly. It will hit joblessness really badly. It will hit household budgets really badly, right? Remember, Trump has been talking about Canada, Mexico, Venezuela, many countries in which tariffs are already being discussed. But on this video, we're focusing on India and what impact this will have on India. Now, this is why it is important. The US is India's largest trade partner. The US accounts for 18% of all of India's total exports, 6% of our imports, and 10% of our bilateral trade. Now, with India and America, there's a trade surplus. This is what's pinching. The difference between what we import and what we export is about $35 billion a year in India's favor. And it's varied a little bit, but stayed in that bracket and has always been in our favor for the last several years. Now, a day before that reciprocal tariff is set to kick in, which is going to happen tonight, we understand from a report in the Indian Express that the Indian Prime Minister's office has cut a deal. Now, this is what it says. It says India has agreed to terms of reference for a bilateral trade agreement following intervention from the Prime Minister's office. Now, what this terms of reference is just a framework for the negotiations that will now take place. The PMO is keen on a swift finalization of the deal, one official has been quoted by Indian Express saying. So, the finalization of that terms of reference or TOR is still pending on Saturday when US negotiators left India after talking for 4 days, but we are hopeful that this will actually mean that we will have some sort of an agreement come through. There is also buzz that India is most likely to agree to lower some of our tariffs, maybe not all, but some of our tariffs for American products. Now, the reason why this is difficult, and it's a difficult decision for our government to make, is because it's a balance, right? India has to export. That's how we make our money, and a lot of our businesses depend on us being able to sell our products overseas. But if you lower the tariffs and allow the imports to flood into our markets, remember American agriculture, for example, is very large scale, it's very mechanized. They will be able to flood our market with corn and wheat and corn syrup and all of the products that they grow. It will crush our local farmers. So India has the, is needed to protect local manufacturers, SME manufacturers, local farmers, producers, small producers in India who cannot compete with the American market. So that is the tightrope walk for the Indian government at this point. But I do want to take you through this one very interesting report that I found. So there's an organization called Global Trade Research Initiative, GTRI. The founder, Ajay Srivastava, has actually put out this very interesting, report where they have taken tariffs that we charge, tariffs that America charges, and seeing what the offset is and what the likely, uniform tariff is likely to be. So let's take a look at what they have said, right? So if the US imposes a single tariff on all Indian products, it will be an additional 4.9%. So 5% on all of our products. Now, specifically, it will hit agriculture and industry, right? So for example, if the US chose to impose separate tariffs on farm products, there is a difference of 32%, and on industrial products there's a difference of 3%, and that's something interesting. Sector level, on a broad sector level, there's a gap of 8% on chemicals and pharmaceuticals, which is a really important market for us where we export a lot, 5% on plastics, and about 1.4% on textiles and clothing. On agriculture, Srivastava has said that it will be the hardest hit sector, fish, meat and processed seafood. Specifically, we export a lot of prawns, shrimps, Vizag specifically, or Visakhapatnam actually exports a lot of shrimp. Now, there is a $2.5 billion export of these products, and the differential tariff between those products is about 27%. So that will be hit hard. Now, sugar, cocoa is the other one where we export about $1 billion worth, and there is also there might be a struggle of about 25% as an increase. Dairy products, again, will have about 38% increase in tariffs if we're just looking at an offset tariff. Industrial goods, on the pharmaceutical side, India's largest industrial export is pharmaceuticals, and we export about $12 billion worth of pharmaceuticals to America, and there might be a 10% or 11% tariff differential, and it goes on like that. Diamonds, gold, telecom, electric products, chemicals, textiles, fabrics, rubber, tires, belts, that sort of thing, ceramic glass, stone products, footwear. So there's a lot of products that we are sending over. For example, we do edible oils, dairy products, ghee, butter, milk products will become costlier as well. So there's a lot of our products are going into the US, and if we look at that differential, it will actually hurt us. And like I've said in the past, though, the silver lining, if you want to look at it, is that America has said that this will be the standard for the whole world. So it's not specifically India, which means that all of the countries you're competing with will also be facing the same problem, and so that might not be so bad, right? According to a report in First Post, analysts estimate that reciprocal tariffs could result in a $3 billion direct loss for India, which is 0.1% of our GDP that we will lose because of these tariffs that we are paying. And global markets are displaying a sort of restrained movement as they wait for further details. But really, we have to come back to see what will happen to the US. Again, according to analysts, Higher consumer prices, which I've already told you, inflation pressure, I've already told you, market volatility, we've already seen. So in the short term, things will become more expensive, people will lose their jobs. In the long term, supply chain disruption, because a lot of times, even if something is being made in the US, like cars for example, the parts are coming in from other parts of the world. So EVs, so Elon Musk's Tesla that we looked at yesterday, where are the batteries coming from? China. So you're bringing in a lot of your parts from the other parts of the world. So your supply chain will get hit even if these things are being manufactured in the US, and that might result in some job loss as well. And then of course the big problem of retaliation risk, where other countries will do it to you, which we've already seen. Several countries like Japan, for example, and Canada are all talking about also protecting their own and doing reciprocal tariffs on the reciprocal tariffs. So it's changed the tone of world trade, that since we've known it for the last 20 years, since we were told the world was flat and we are trading across and that's the best way to do it. For the rest of the world, including India, export dependent economies are going to be hit hard. So Vietnam, Mexico, countries like Germany that send a lot of cars to the US, and of course countries like India, there is going to be pain, and it's pain that our country is obviously going to negotiate and try and negotiate our way out of it. There will be redrawn trade agreements, but there is a risk, because America is such a large market of Faye. If there is even a small slowdown in America, it hits all of us, and there's a risk of a global slowdown. There's a risk of American stock markets having a bad day or a bad week or a bad month or a bad quarter, and that might lead to obviously mirrored reactions in markets across the world. So we're just going to hold on. And it was very interesting also, I must tell you this, when my team and I were having this discussion saying we need to put out an explainer, someone said, but you know what, the announcement has to come at midnight. What if he pushes it by 3 weeks, which he's done for a lot of tariff announcements so far. And we're going to put out this video after all this work, and then he's just going to push it. But it'll always be here as a reference even 3 weeks ago. But still, we'll have to watch and see what he does. Is it actually going to kick in from midnight? Are they going to kick the can down 3 more weeks a little further down the road? We don't know. But this is massive if it does happen, and it's massive for everyone across the world. So we're going to watch very closely to see what America does tonight. Remember, half past midnight India time. Leave me a comment if you think that it's a good way to reduce dependency and sort of become more independent. The Indian government, I must point out, has been working really hard to try and reduce the impact on India as far as possible. We know that the Commerce Minister has flown out. There've been series of conversations to try and avoid the worst outcome. Hopefully all of that has worked out, and that's going to play out over the next couple of days, and we'll tell you as and when it happens what's going to happen. But leave me a comment and tell me, what do you think of Donald Trump's new protectionist outlook to how America will trade with the world?